Okay, welcome to the first edition of Energy Management Institute's What's Up Monday for natural gas. You will also find a similar presentation on oil. We'll do both of these presentations every week. Our objective is to get them published on our website Monday morning, thus the name, and hopefully you will find them to be useful in both your trading and hedging documents. I'm Dominick Chirichella, and I'll be recording and analyzing both of these markets and presenting them to you each week. So let's get started and see where we are in the natural gas market. What are the movers, or what are the potential market movers for natural gas this week? I guess it's almost could say is what is the main mover, and that's certainly the short-term temperature and the short-term temperature forecast. That's where the action is. That's where the market is looking at. We've just come off the end of the year. The last week of the year was extremely cold. It was Arctic type cold. I guess some people like to call it polar vortexes or Arctic blasts, but it was cold. This current week, the week of January the 2nd, it is also cold, probably going to be colder than it was last week. I'm in the New York area, and we've been experiencing single-digit temperatures overnight. There's a snow event approaching the east coast of the United States, and it's certainly looking like the cold weather will be with us at least for the next 3 to 5 or 6 days. So weather is the main driving factor of where natural gas prices will be going in the short term and potentially the medium term. But really, one almost has to look at natural gas right now as principally a short-term movement market. It's going to be driven by the winter weather, irrespective of what forecasters may be looking at for the upcoming spring and summer events looking at natural gas. What else is potentially going to be moving natural gas? Certainly the weekly EIA inventory report. Unlike oil, which is going to see its inventory report delayed by 1 day, the natural gas inventory report will come out at its usual time at 10:30 a.m. Eastern Time on this coming Thursday, and we'll talk a little bit more about those projections later into the presentation. And the upcoming inventory projections are starting to look bullish. They're starting to look supportive for this market. We're starting to see inventories depleting at a much faster rate than both last year and the 5-year average. So a bit of a cautious flag flying insofar as inventory is concerned, because inventory is such an important part of our supply system during these winter months. And last but not least, volatility is really running high. We haven't seen this much volatility in natural gas in quite some time, especially after coming off of much warmer than normal winters, and a kind of a muted summer season for the last 2 summers. But the volatility level is very high. It's extremely high even on an intraday basis. We're seeing movements on an intraday basis of anywhere from basically 15, 20 cents at MMBTU on an intraday basis. And over the last week, we're actually seeing on a daily closing basis even above normal levels of volatility. So watch the volatility and be careful in entering and exiting. You may find being on the wrong side of a temperature forecast or the wrong side of an analyst forecast. So caution is the word here. So where are we today? Around noon on Monday. Hopefully next week we'll get this thing out a little bit earlier. But on noon on Monday, the spot February NYMEX contracts up about 8 cents an MMBTU. It's trading above the $3 psychological $3 MMBTU psychological level. It's approaching the upper range resistance of around 305, with the March contract lagging a little bit behind the February contract. And why is that? It's principally because the market is trading based on today, based on what they're seeing today, based on what they're seeing the weather is going to be like over the next week or so. Whereas by the time we get into the February time frame, it's looking like the weather could potentially be back to normal, even maybe even warmer than normal. So not so much emphasis on the March contract at the moment. The other thing I want to point out is something I like to look at, and we've seen a tremendous amount of volatility and movement in this particular spread, and that is the Feb-June spread, or what I like to call the winter-summer spread, and I'm also showing a version of it with the March-June spread. Both of these spreads are trading at double-digit levels. They've been significantly lower just 2 weeks ago. In fact, the March-June spread was trading at a negative level. So you could see a tremendous appreciation in these spreads, and these spreads are really good indicators of the current fundamentals. They really bring out the market's view of the implications associated with the cold weather. And last but not least, as we get down the road, looking at Q2, 3, and 4, we see the market moving back into a contango, which it normally does that time of the year, and we're still seeing the 12-month strip running noticeably below the $3 level. So the market is very much reacting to cold temperatures, but on the other hand, it's still looking down the road and saying the record levels of production are probably going to keep prices somewhat suppressed, and at least for today, we're still looking at that strip as being below that psychological $3 a barrel, or $3 an MMBTU level. So let's look at this on a chart. Let's look at the Feb chart and the March chart. The Feb contract, we could see we broke out of the linear regression line to the upside. The linear regression channel has been in a downtrend for several months. The market has struggled to gain any traction, and finally we're getting what many are calling the first true winter-like weather in several years. So the net result is we've seen an upside movement in both the February and the March curve, and again the March is lagging February a bit, but they both are broken out to the upside, at least for the last this would be the third trading session, but fact of the matter remains, we still need to look at this a little bit more carefully over the next day or so to see, make sure it's not a false breakout to the upside. Here's a couple of charts of those winter-summer spreads, and again, responding much like the flat price, and we see they've both broke out to the upside. It's trading very similarly to the flat price trade, so it's both very, very fundamentally driven at this stage of the game. The major difference between the flat price movement and the spread movement is the spread movement is trading at a lower level of sensitivity or a lower delta compared to the flat price. Thus, for one that wants to still trade the winter to the upside, maybe wants to trade it with a little less risk, maybe they go long the spread rather than going long the flat price. But be that as it may, they're both going to move based on those daily and multiple times a day weather assessments as to where we're going over the next week, 2 weeks, and 3 weeks. So that next big event is going to be the big fundamental event will be the inventories. This week, we're projecting the inventory to come in at around 210 BCF net withdrawal, which will be quite a change from both last year and the 5-year average. The inventories are destocking, as I mentioned before, at a much more accelerated pace than what we've seen last year and the 5-year average. So one of the larger withdrawals of the season so far. But what we'll see here in a couple of slides, by far, it's not going to be the largest withdrawal of the season. We got some deep winds coming with the cold weather prevailing for the current week we're in right now. Don't forget, this week's inventory is based on last week's weather, and this week's weather is looking like it's going to be noticeably colder than it was last week. I like to look at where we are. It's a little bit of an indicator. Certainly not perfect, but it's looking at a plot of the weekly change in inventories compared to the weekly heating degree days weighted for natural gas customers across the United States. And again, you could see a linear regression line on this data as the heating degree days increase in sensitivity as it gets colder and colder as we go out along the way. Obviously, we're going to have larger and larger withdrawals from inventory. The previous week was right around here, very close to the linear regression line. This week, we're looking at the heating degree days coming in someplace for this week on a weighted average basis, someplace in this vicinity in here, which means that we're probably going to see withdrawal from inventory could be even greater than what we're seeing on the slide, maybe down here into the low to mid 300 BCF levels. So very bullish numbers for the next couple of weeks. We'll see where we go beyond that period of time. And if we look at where inventories wound up for the week ending December 22nd, we're running a little bit below the 5-year average, not quite down to the minimum. We're going to probably drop down here before it's all said and done. If we stay extremely cold for another week or two as we plot and move this chart into 2018, we may be exceeding the 5-year low here, which could be a relatively bullish signal here for higher prices going down the road. So let's look at some projections here for the next month or so based on what we're looking at for the current weather projections and supply projections through February 2nd. The model is showing a cumulative withdrawal of around 1.3 TCF, 1.4 TCF, which is very aggressive and also very bullish compared to both last year and the 5-year average. And in fact, if the actual withdrawals are in sync with these projections, we could see basically the inventories at the beginning of February running around 24% below last year and about 21% below the 5-year average. Again, I would categorize that as a bullish fundamental development. That said, the weather has continuously changed. We have to be really careful, and this is something we update almost daily to try to keep abreast of what has been a relatively unstable weather pattern. If we look at the season to date, the official heating season is the period of October 1st through March 31st. And as you could see, and I've broken up this isn't based on heating degree days. And the heating degree days, I've broken it up by total U.S. nat gas weighted customers and just total U.S. all customers, which would include heating fuel, all heating fuels, heating oil and propane and electricity, which is in essence mostly natural gas. And you could see compared to normal is the 30-year average. The heating season through December has been running warmer than normal and basically a bit colder than last year in all instances. And through the first week in January, based on the projected numbers here, we're looking at an aggressive, much colder than normal situation, which is going to result in a pretty strong draw in inventory. It's going to also result in relatively high levels of customer consumption during this period of time. Putting all the pieces together, the season to date is now only slightly warmer than normal for U.S. nat gas heating degree days and slightly colder than normal for basically all heating customers, and basically running a bit colder than last year. And we know last year was very much a warmer than normal winter. So what's my main chart of the week for natural gas? Has to be the short-term weather forecast. And when we look at these short-term weather forecasts, the 6 to 10 day period is still showing a somewhat bullish projection here, although the intensity of this below normal area on the map is not nearly as intense as it was just 3 or 4 days ago. But when we look at the 8 to 14 day chart, we're seeing this area of the country, the East Coast, and even part of the Midwest, we're starting to see more normal temperatures moving west, and potentially that can turn out to be also even above normal temperatures. This is the big caution flag that we are raising right now. This is the caution flag, and we have to watch this very closely because if this system starts changing here for the second half of January, we could see a distinctly different profile of how natural gas prices are going to be trading within the next week or two. So how high can natural gas prices go? That's a difficult question to answer, but it's a good question, especially if you're a hedger. Certainly if you're a speculator, you're going to be playing this thing close to the cuff, and I trust if you're speculating, you're going to be playing it with very tight and close trailing stops in the event that we do get a reversal. And based on today's volatility that I talked about, those reversals could be very severe and very quick along the way. But from a hedging perspective, how high could we go? Well, if we stay cold and those inventory withdrawals that we talked about earlier in the presentation come to pass, we can easily stay above the $3 level and work our way into the mid threes, 350, 360, potentially even higher, depending on how cold it is. And that'll certainly extend the forward curve to higher levels. So if you're speculating, it's kind of suggesting to be biased to the long side. If you're unhedged and you're a buy side hedger, you might want to bring some option strategies into the mix. Maybe protect yourself to the upside while still participating to the downside in the event that it does warm up. What's the deterrent for higher prices? What's the deterrent? The main determinant is going to be the weather forecast. The main deterrent is going to be the weather forecast if it's not cold. Secondarily, it's going to be U.S. production. U.S. production has been running at very high levels. If we continue to stay tremendously cold, we're going to have some freeze-offs, and some of that record production could come off for a while, which could ultimately result in a higher call on inventories than originally anticipated. So it's the weather, and that's kind of what we need to be focusing on as the main determinant for the price, as well as the main deterrent if it's not really colder than normal. So what do we say? What do we say? What do we look at? What's our conclusions right now today on January 2nd? We still like buying dips. We certainly strongly recommend using tight trailing stops to mitigate any unforeseen sell-offs to the downside. We don't like chasing the market. And again, be cognizant. This is not simply a technically driven model market. This is not a very projectable market in that the weather forecasts have been changing so drastically from week to week and almost from day to day. So it's a tough one, but my bias is to the upside. My bias is to buy dips rather than sell rallies right at the moment. My position may change a week from now or even a day from now as the weather forecast changes. So I like being a little bit long natural gas. And if one wants a little less exposure, I like the winter-summer spreads. And again, either direction to use tight trailing stops. And again, be aware that there's a lot of variables and a lot of unknowns that can impact or derail this upside movement. And again, but if the weather holds, there is going to be some more upside price potential here. So basically that concludes our first look at nat gas. It's kind of like, the three most important things in real estate being location, location, location. Well, the three most important things for natural gas price direction today is weather, weather, weather. And most importantly, it's cold weather, cold weather, cold weather, and how cold will it go and how long will it stay? That's the driver. Nothing more, nothing less. You need to pay attention to that. Look at all of the daily forecasts. We get weather forecasts all day long, and the market's moving on those both public and private forecasts that are hitting the market. Again, this is Dominick Chirichella. If you would like to email me, my email is in the front. Feel free to do so. I'd be very thrilled to answer any and all of your questions. Thank you very much for joining us. Visit us again. Walk around our website. We're adding many new online, full-blown educational programs. Take a look at them, see if any of them fit your objectives, and hopefully you might want to join in on one of those programs.